Hi, I'm Karen Lee. I'm a certified financial planner and the owner of Karen Lee & Associates and a registered representative with LPL Financial. Today we want to talk about the income tax on both life insurance and annuities. We're going to start first with life insurance. Now, first of all, why do people buy life insurance? Typically, it's for the death benefit. Just in case you die and others will suffer from the loss of your income, you buy life insurance to protect them. Let's say you've bought a life insurance policy for $250,000 of death benefit. If you die, the question is, when this pays out to your beneficiary, what's the tax status on that? So answer number one is death benefits transfer tax-free to your heirs. But the next reason some people buy life insurance is to build up a cash value. The only kind of insurance that builds up cash value is permanent life insurance, which comes in both whole life and universal. But let's answer the question of how is cash value treated when it comes to income taxation? First thing you need to understand about cash value is it's going to be a combination of your premiums plus any earnings, dividends, or interest that the insurance company is paying. The premiums that you put in are after-tax dollars, money that you've earned that you've already paid taxes on. But the earnings, those grow tax-deferred. If you are planning on accessing your cash value of life insurance, you need to understand the way the IRS looks at these two amounts, the premiums and the earnings. They use what's called FIFO accounting. FIFO means the first in is the first out. The first in are your premiums. And remember, we said that premiums were after-tax dollars. So when you go to access your cash value, first in, first out, you're going to take premiums first. Once you've taken all your premiums and now you're going to access earnings, these earnings have grown tax deferred. So to access those earnings, you do have to pay ordinary income tax. The difference though, and I think something that's very unique about life insurance, is that every other financial vehicle that the IRS has declared will grow tax deferred, things like IRAs, 401ks, annuities, all those other vehicles have a penalty on those tax deferred earnings if you take them out before you're 59 and a half. Life insurance is the only financial vehicle that does grow tax deferred, but if you chose to pull that money out, premiums first and then earnings, although the earnings are taxed at ordinary income, regardless of your age, there is no early withdrawal penalty. Similar to life insurance, annuities also are allowed by the IRS system to grow tax deferred. So unless you have your annuity inside of an IRA, we're going to assume that you have put in after-tax dollars, money right out of your paycheck that's already been taxed. Assuming you put in after-tax dollars to an annuity, you're also going to have two components: your deposits and also any earnings. As I said, the earnings grow tax deferred. Unlike life insurance, the IRS uses a different accounting method. For annuities, they use what we call LIFO. Last in is the first out. So when you look at the deposits you put in and the earnings, if you go to take money out of your annuity, you must take out the earnings first, and that's the last in. The earnings, as you remember, they're growing tax deferred. So again, like life insurance, when you go and pull those earnings out, there will be ordinary income tax. But in addition, like all other retirement vehicles, there is a 10% early withdrawal penalty if you take this money out of the annuity before you're 59 and a half. So in closing, both life insurance and annuities have preferential tax treatment by the IRS. Both grow tax deferred, but very different income taxation rules apply. As always, we suggest that you consult with a CPA or other tax planner when purchasing these products, especially when starting to take money out. I hope we've answered your question on income tax on life insurance and annuities. My name is Karen Lee. I'm a certified financial planner and owner of Karen Lee & Associates and a registered representative with LPL Financial.